So hi there, we are in 2024 and wish you a very happy new year. Now obviously if you are in the markets, then the question is whether it would be the bulls year or the bears year. Now it's very difficult to answer that question because really speaking, if you look at the historical data, most of the times Nifty has been positive over the last 23 years, barring the exceptions when something catastrophic happened at a global level, and then Nifty did not give the returns as anticipated, and it saw a few that particular year in negative, and then a few years of further consolidation. So what we did to begin the new year to understand what can happen in 2024 is to really understand what has happened in the last 23 years, and we pulled all the data from NSE of Nifty 50. And while we pulled all the data, the first thing was obviously to figure out which have been the years in which we have gained as Nifty and which have been the years which have not given us the required gains. So really speaking, in the last 23 years, starting from 2000, Nifty has been positive for 18 out of 23 times. So that's a fairly big number. So mostly it ends up in green. Now, even the time when it is not ending in green, there's a clear pattern that it is not the domestic economy, it is not Indian economy which is causing that red. It is primarily a crisis at a global level which removes the trust that people have in the economy globally, and India gets also punished because of that, or for that matter the Indian markets also witness that. So if you look at 2000 2001, these were brutal years, as you can see over here the numbers indicated, but primary reason why it was like that was that the dot-com bubble had bursted, and not only Indian markets but the global markets were in red. And once this thing settled down, and which took at least 3 years to settle down, because even if you look at 2002, it's not good return. But then Nifty recovered to give a very good return for the next 6 years. So if you were investing during this period, independent of what you would have seen in between 2000 and 2001, if you were continuously investing and going by some strategic thought process that okay, when it is going in the negative then I'll invest more, and when it is going in positive I'll still do my part, then you would have been able to get a good return for the 7 years of the 2000 initial. And then the Lehman Brothers happened, which was again a global crash, and the markets fell by 51%. Now this is where a test of an investor comes in. The markets have fallen, there's an opportunity. One is that do you have the investment appetite at that point in time? That is why you should always have some cash. And then do you have the ability to take the risk at this point in time, when you're seeing that you just before 2008 crash, your portfolio might have been at X, now it is less than half of that. Now do you buy more at that point in time, or when do you actually start buying? That's where the test happens. So similarly again in 2011, and after that it has been more or less a very stable return. Even if you would have just taken a simple bet that I'll invest on the day one of the year, then for most years you would have gotten good results, other than few average years and one exception of 2015, because 2014 gave a very good run up. If you really look at it, these 3 years which were in the anticipation of Modi ji government, there were good returns. Probably like if you would have invested at this point in time, started investing at this time and gone all the way up till here, you would have almost gotten like 60-70% returns just on the Nifty. So overall the markets have always given positive returns. And now the other question that is that okay, if the markets have been positive, now in 2023 we ended with a 20% gain from 1st Jan of 2023 to 31st December of 2023. The other very important factor is from a valuations perspective. Where does it stand? Has the market traded in some kind of a range, and like when has it started swinging back? Because some of the clear indicators are that if you really look at it, 2022 was not a very good year, 2018 wasn't a very good year, So let's what we did also is that we tried bringing in the P and started looking at like, okay, when is the peak of the P has been and what is the like average zone in which it has traded. So we really look at it starting 2012 when the market started picking up again. The average P has ranged in between 18 to 30. Now it has gone all the way till 30, but it has more or less been in the range of 18 to 22, 23, I would say. Now some exceptions being 2017. So we really look at it from 2017, it started going up in anticipation and it went all the way up till 21, that is 30.61. And if you really look at it, this is a very high P when you look at what the average has been in the past, what other markets trade at. And that is why 2022 was kind of cooling. If you really look at 2022, this is like fairly an average return from the market. And for that matter, I think Sensex ended up in negative. Now, what has happened is very interesting. That although in 2023 the markets gained and it went, but the P still is at 21.71. So effectively speaking, from a valuations perspective, what we can safely conclude is that the markets are trading in a very fair value zone if you just look at the averages compared to 2021, which was just after the COVID period, and because of the fact that it was coming out of the COVID zone, the corporate earnings were not that good. So this was the COVID period, literally 2020 and 2021 for that matter. It traded in a very high zone in anticipation that there will be recovery. Generally speaking, the recovery has happened in 22 and 23 and the markets are trading at a fair value. If I look at it today, wherein even the COVID period, the markets didn't end up in red if you look at a year to year kind of a transition, but it was fairly at a higher valuations, and even in 21 it was at a higher valuations, but 22 and 23 it has cooled down and it's at a fair value. And if I really look at it from all the way from 16, it has either traded at above the current valuations or in the valuations close to what we have today. And so from a valuations perspective, we're not trading at a very high value today. What we also are concluding that if there are any catastrophic crisis that comes in the world, that is a time when Nifty doesn't give you that kind of a return. And what we also did for that matter is we actually studied that if there's too much of a churn in these 23 years on the Nifty index, and what our realization is not too much of a churn, at least for the last 6-7 years I've looked at the data, and it seems that most of it is in the similar companies. The companies have come in and companies have moved out of the Nifty index, but it's still at a fairly same basket or a similar basket. Now, given that, what should as a retail investor you do? As a retail investor, if you really think about it, the key takeaway is the fact that we're not trading in an overvalued zone. So don't look for perfect timings. Only if there is a crisis, the situation can go bad. So you should look at numbers, invest with conviction, and you should maintain a SIP, because what is important for you to understand is that if you're not in the market, then you will not be able to invest at this point in time also, because you'll not be able to understand it that well. So you should definitely invest in every period. But the only thing is that whenever the market gives you an opportunity, you should have the conviction to, bear the loss, see your portfolio in red, and then still be able to invest more money into it. Now that's easier said than done, but effectively speaking, you should be mentally prepared for that. So that's what the basic hypothesis would be, that currently we're not in an overbought zone. Nifty is in a fair value zone. The second part of it is also the fact that this is an election year, so there will be a little more volatility, which means that even if the crash doesn't happen, there will be few ups and downs, and that will give you an opportunity. So maintain your SIP, assume that you will get good returns, and if there's no crashes, then obviously you will have a good sleep. But if there is a opportunity, then be willing to invest more even though your portfolio has gone down. So that's for the situation which is SIP or lump sum. If you are interested in trading, then obviously it depends upon how the news is coming up. So it's an individual call, but at least as a retail investor, you should be looking at SIPs and then be willing to invest as the dip or the crisis happens. While you wait for the dips, maybe you can always park some of your money in the debt funds. But overall, a very good year for Nifty. As a concluding thought, we're not in an overbought zone, and mostly if you look at it, Nifty has given good returns. I'll see you in the next one, wherein we'll try and figure out what ChatGPT can tell us about this data. But this is just a basic analysis which is based on historical data. Bye for now. See you.